Good morning, everyone. Welcome to Adda 247, and my name is Niharika Valia, and I'm here with you for the area of JAIIB, and we'll be covering the MCQ series for JAIIB today, and I'll be coming up with 10 plus questions today for the series. So the first question is, am I audible as well as visible? Okay, so when we talk about JAIIB, the examination has got good amount of questions towards the accountancy, towards different areas. As per the new syllabus, you can see there are many things to be covered in a proper way. So more or less, the consistency is the key in terms of your preparations. So let's quickly move on and move towards that area. But before we move towards our preparation area, we have started with our two batches for this examination. That is JAIIB, new batches have started. That includes, we have started one batch for the English medium, that is for AFB, and you can also look forward to our app or the website for the new target batch for all these, for PPB, AFB, and LRB. The batches have started from 11th, and there's one more batch which is going to start from 25th. So we have got two of these. One is July 11th, and the second one will start from 25th of July. So if you haven't reviewed our portal yet or the app yet, then kindly go ahead and check it out. You'll find all the details there regarding the classes, what is the study plan, how to pursue the area of JAIIB, and for that, what you can do is just go and check out our app and or the website, and then you can use the code Y538 to avail a discount of 78%. And at the same time, we are also having a particular sale at this point of time going on, and so you can definitely go ahead and check that out as well. This is a time where you can definitely review our website as well as the app for various offers, and you can claim your benefits out of it based upon what you are looking forward to, right? So let's move on and now understand how to pursue with this area of JAIIB in terms of AFB. Okay, this is the first question. The question is from the area of GAAP. Generally accepted accounting principles have been formulated by GAAP. These are also called GAAP, but when we talk about how we spell it out, when we are talking about it, the pronunciation comes out to be GAAP. Generally accepted accounting principles have been formulated by, has it been formulated by the International Accounting Standard Board, or is it formulated by Financial Accounting Standard Board, or the National Advisory Committee on Accounting Standards, or the Accounting Standards Board? Okay, when we talk about GAAP is basically the generally accepted accounting principles. These rules or the principles, these have been formulated and are used in US. In US, there's a particular principles that have been followed, and these are somehow related with IFRS as well. At the international level, we have IFRS. IFRS, International Financial Reporting Standards. These standards are used uniformly in the entire world because we needed a uniformity in terms of working, in terms of the uniformity regarding the presentation of accounts, in terms of the rules that are being followed, the conventions that were followed in different countries were really not matching. So we required a uniformity in terms of the presentation of accounts, so we could compare different companies of different countries rather. So for that, they created all these. So IFRS was something that was created at the international level, and it was formulated with the help of IASB. So IASB was the board responsible for that. While when we talk about GAAP or the GAAP, the generally accepted accounting principles are formulated in US and it is followed in US only. But these are again formed while considering the IFRS. But again, it's followed only in US. GAAP is basically what? The correct answer is B, that is Financial Accounting Standards Board, FASB. Now, when we talk about this, it is basically a collection of commonly followed accounting rules and standards for financial reporting. As I told you, this is basically a set of rules or the presentation of various aspects of accounting in such a way that it has uniformity in the entire country. Like India also has these kind of rules. Earlier we had AS, which are issued by ICAI, right? So in India, these rules are formulated, issued, and maintained by ICAI. They keep on changing it as and when it is required. ICAI is Institute of Chartered Accountants of India. And when we talk about AS, then later on, since IFRS was also hitting India equally, so India also started following it in such a way that we have now introduced IND AS, or Indian accounting standards, which are based upon IFRS. So definitely IFRS has affected every single country where there is an international working going on and there is a requirement of the interaction with at the international level, and you need comparisons as well, right? So when we talk about the GAAP, it is basically an acronym which we call GAAP is GAAP, and the specifications are basically based upon industry specific rules. When we talk about the industry specific rules, see, the point is, at one point of time we are following some rules which are uniformly accepted by all the businesses, but still there are certain things where you need uniformity which is related to only a specific industry, right? So when we talk about only a specific industry, for example, let's come to India and let's understand what India does. In India, banking industry or the insurance industry, they have their own specific way of showing their books of accounts too, and they have their own set of rules too in terms of working. So aren't they following the basic rules of the country or not? They are, but the point is there's a specific rules which have been built up for them, and they are supposed to follow that as well. So this is also there in the US as well. Every country have their own specific rules which are general for all the areas in terms of all the industries. Also, they have specific areas where only a specific industry gets affected, or that clause is applicable only on that industry. Okay, now moving on to the second question. The second question also relates to this area. Among the following, which is not true about generally accepted accounting principle? There are certain misconceptions about GAAP in the world. So among them, which is not true? I'm not asking which is true, but I'm asking which is not true. Number one, it is adopted only in the US. Second is GAAP allows inventory write-down reversal. Third, GAAP uses a cost model for fixed cost evaluation, and then its development cost cannot be capitalized in the GAAP, and it is always treated as an expense. So when we talk about the GAAP, GAAP is definitely used in the US only. That means the point number one is correct. When we talk about the second one, let's talk about the third one first. GAAP uses a cost model for fixed asset valuation. For fixed asset valuation, yes, they use it. They don't really revalue it. They write it as a cost model. Cost model says whatever price that you have paid for that particular thing, you will be noting it down at that point. That is a cost model. And yes, this is the point where they do not capitalize any of the development costs. If they're developing some assets and they have some costs in there, they just use it as an expense. That is a specific area where GAAP has their own set of treatments. But the point is, the GAAP does not allow inventory write down reversal. There's no reversal for the inventory write down. That is the point where GAAP differs from others. So the correct answer is actually B. GAAP does not allow it. It is not like that. It allows. As I've told you, this is something where you have to answer which is not true. So in actual, GAAP does not allow the inventory write down reversal. Writing down is basically just reducing the value, and that particular thing, reversal, is something which the GAAP has definitely said that this is not allowed with us, right? Okay. Now let's move on to the next question. This question relates to the area of accounting concepts, and the accounting concepts are formulated. This is the base of accountancy. If you can understand this area properly, then the trouble of facing in terms of the point is that accounting principles and the accounting concepts that you're dealing with, these are the base for your accounting preparation. If the base is clear, whatever building you would like to build on it, it would be definitely something which would turn out to be stronger. So let's understand this area as well. Provision for the bad and doubtful debts is prepared on the basis of, is it prudence, matching principle concept, historical principle concept, or accounting period concept? When we talk about all these areas, the number one is prudence. Prudence means we all are scared in life. businessman is always is. So he's always scared that what if I lose my money someday? So what should I do at this point of time? I need to save my money. And that is what they do. When we talk about the term prudence, prudence says anticipate the losses. Go ahead. You need to know that there might be a loss, so you need to save accordingly, but not profits. Okay. The next point is matching principle concept. When we talk about the matching principle, this concept is quite easy and simple. How can I say that? It's because when we talk about the matching principle concept, it says that if I spend money today on whatever I'm trying to make today, then the income that is earning out of it shall be booked today. And here, in terms of today, let's put 1 year. That means that in this year, I wanted to earn money. So I said that I need money. So what I did was I started spending to earn money. One of the basic things that you need to learn when everybody learns about it. And this is basic money concept. That is, if you want to earn, you'll have to spend even. So it's like every businessman does that, because when they want to earn more, they have to spend more. So when they spend money in one particular year to earn money, so this is where the expenses in the year are noted and the incomes of the relevant year are also noted along with that. So this is where the matching principle concept comes in, or it is actually called matching principle, or you can actually call it the matching concept. Now, the next point is a historical cost concept. This concept basically provides us protection from many of the areas where you might be suffering because of the inflation accounting or the changes in the values of various assets over the period of time. Because if you're going to note it down every single day, it's going to be a very cumbersome task. Because every single day, if I have to note it down, what is the value of the place where I'm living in? What is the value of the premises that we are working in? That is not sensible. So what the accounting principles did, that they said, if you purchase an asset, note the value of that asset at that particular price only. Right? That is historical cost concept. And last is accounting period concept. Accounting period concept says that the entire life of a particular business shall be divided into years. And what kind of years are we dividing? That is, 1 year is equal to 12 months, and where we define it as per the financial year. It starts from 1st of April to 31st of March. So the provision for bad and doubtful debts states that we are scared. Everybody is scared. So the businessman is also scared that what if a debtor doesn't pay me the money that he's supposed to pay? So if he doesn't pay that money, then there's a trouble. So what he does is he uses prudence. He anticipates the losses but not profits. Right? So the correct answer is A. Bad debts are basically, this is something that occurs because a specific debtor refuses to pay the money. So that means you are facing a loss there. And provision means we are scared about the fact that we might lose in future. So we put aside a certain amount of money and think that if the person doesn't make the money, doesn't pay us the money, then at least this money that has been kept helps us to absorb the loss. So this is prudence, or it is also called conservatism. Right? It is conservatism. Now, let's move on to this next concept. It says that when Zolo Telecom sells its customers the talk time through scratch cards, it does not recognize revenue. Then when the scratch card is sold, but it is recorded when the subscriber makes a call and consumes the talk time. If right now it has definitely reduced, but there was a time when people used to purchase the scratch cards, and then there used to be a code. Then you can you pay for that, and then you get the talk time that you're looking forward to. So at what point of time the companies were recording those scratch cards in terms of their sales? Well, then this is the area where they're talking about it. Then the concept regarding the recording of such transaction is it prudence? Is it the realization concept? Is it the matching principle concept, or the historical cost concept? We are done with the concepts related to the prudence in the previous question, matching principle, as well as in terms of the historical cost concept. So the new concept that we're learning is realization concept. the day the organization doesn't know whenever a particular person has purchased a particular scratch card. The moment the particular person uses the scratch card, gets the talk time, then the company comes to know about it. And the moment they realize, yes, we have made a sale, this is where they record it. So the correct time is decided as per the realization concept. When do we recognize the sale? This kind of question arises with every organization, and based upon the industry variations, it is difficult. So every organization has a set of rules when to recognize their losses and profits. So according to this concept of revenue recognition, revenue is to be recognized only when the rewards and benefits are associated with the items that are sold here. Whatever they are selling are the scratch cards, and from those scratch cards, what do we get? From these scratch cards, they get the money. So that is their income. So revenue recognition can be taken here, revenue recognition or the realization concept. Another name of this principle is revenue recognition concept, right? So let's move on to the fifth question. So every single day we'll be coming up with the series of the questions for the JAIIB examination. So stay tuned and keep on learning with us. And at the same time, if you haven't reviewed our courses yet, then kindly go ahead and review our JAIIB courses on our website for further details. Now, let's talk about question number 5. Sale is recognized as revenue. Now, this is where the previous question can be taken up. It says that when a contract for sale is entered into at the point of sale or the performance of service, or after the expiry of credit period allowed to the debtors, or after the money collected from the customers. Now, this is one of the basic problems which I just told you, that organizations needs to determine when are they exactly going to record their sales. Is it when the contract of sale is entered into, or at the point of sale or performance, or is it after the expiry? The point is that debtors or creditors, they don't have anything to do when it comes to, if I sell you something, I'll record the transaction as and when I've given you that particular product, right? If there's a particular sale of good, then as soon as the good is given to you, the sale has begun. After that, I have a right to recover the money from you later on. So in this case, the point is that the point of sale of performance, or when we talk about I've given you the goods, or I've given you the service. So there the service is also there, because at this point of time there are professional organizations as well. They don't sell anything. So it's more about the goods or the service. Once that particular thing is done, the organization records its sales. After this, they have a right over the debtors to recover that money from them. And if they do not pay, then the organization faces bad debts. So this is where this area hits in. Chale. Let's move on to the question number 6. The question number 6 states that in the ASR. Now there's a difference between the generally accepted accounting principles and the IND is Indian Accounting Standard. This is basically something that is used in US, and this is IND. That means we have Indian Accounting Standards. These have also been taken from IFRS only, because we were supposed to have a uniformity with the IFRS. There was a dire need. India had issued a set of the accounting standards back in 1949. It was formulated ICAI, and then they introduced their accounting standards later on, and they introduced and reintroduced, amended of all these accounting standards. There were at that point of time 32. So a few of them have been removed. They are still there. Many of them are still there. But the point is, now they're obsolete because of the fact that IFRS is hitting in. Now it has been accepted by many countries. So we wanted that uniformity. So ultimately, India also pushed itself and worked upon the area and introduced their set of accounting standards. So these IND AS are these rule based, or these are principle based, or partially rule based and partially principle based accounting standards? When we talk about GAAP, they are rule based. So this is one of the basic areas. When we talk about GAAP, it is a rule based accounting standards. While when we talk about the IND AS, India doesn't follow that rule based thing. It is basically a principle based accounting standards. That is one of the basic definitions that comes up regarding IND AS, that it is not rule based, it is not rule based or the mix of rule and principle. It is clearly a principle based accounting standards. Now, there's one particular question. This is basically from the area of journal. That is, X sells goods on the credit to Y. He received 10% of the trade discount from X and further 7% of cash discount if paid within 20 days. Y bought these goods at with the list price, that is 2 lakh, from X. Which of the following journal entry could correctly record the sales which has been made in the books of X? So X is the seller here. If X is the seller, how is it going to record the amount that it has sold to Y? When we talk about this in terms of the sales, what happens is that when the goods are sold to someone, at this point of time, if it is sold in bulk, then you give trade discount to that particular person, and trade discount value is not recorded in the books of accounts. It is not shown in terms of the journal entry. Only the treatment is visible overall. And when we talk about this, after giving the trade discount, we also give another kind of discount for anybody who pays in advance or is someone who is going to pay before the given time tenure. That means if anybody pays before these 20 days, that particular person will also avail the cash discount. So this is also there. When we talk about the trade discount is for 10%. That means for 2 lakh rupees, 10% TD has been given to that particular person. That means it is right now at 2 lakh minus 10% is 20,000. It gives you 1 lakh 80 at this point of time. So 1 lakh 80,000 is the amount at which we have sold the goods to Y. But at this point of time, one more thing is important, that the 7% cash discount will be available only if the particular person would have paid in 20 days, and that particular thing is not given here. So you will not look forward to 1 lakh 70 or 1 lakh 90 or any other point for that matter. The most important thing is trade discount is not shown in the journal entry. And in this question, the cash discount is also not given because nothing has been specified regarding the proper payment. So in this case, the correct answer would be, since the particular person to whom we have sent the goods is basically a debtor, so debtor would be debited and the sales would be credited in this. Okay. So what is going to happen here is the correct entry is debtor to sales, based upon the principle that debit the receiver, and we have sales, that is basically a source of income for the organization, right? So that is income is credited in this case. So what happens is, in this case, your Y to sales 1 lakh 80,000 would be the answer. Rest everything is just added for the confusion. So basically 2 lakh minus 10% of it, that is 1 lakh 80,000 is the amount that we pay, that we are going to ask that particular person to pay us, and this 1 lakh 80 will be recorded as Y to sales. Later on, we can recover this if this particular person says that he'll be making the payment within 20 days. Only then we give the cash discount. Otherwise, we do not give the cash discount. So it's more about, if it is given, the cash discount is supposed to be given, only then you give it. Next question is, a petition for 4 lakh was lodged against the machinery with the book value of 4 lakh 50 that was destroyed in the company. The following is an example of an insurance claim that has been received whenever a particular, we all go through the insurance, and insurance is definitely important for any organization to cover up their losses. So what happens here is, in terms of this 4 lakh that has been damaged, but the book value was 4 lakh 50. Now, when they are receiving the insurance claim, is it capital expenditure or the revenue receipt or the capital receipt or the revenue expenditure? See, we are receiving money over the in terms of the compensation, because we have got damage to cover. And again, it is of 4 lakh 50, but you're receiving 4 lakh. So when there's a difference there, this is basically capital receipt. No doubt the organization has lost money of 50,000, but that's not the point, because it's about the insurance claim that has been received from the insurance company. So the insurance company is paying us for the damage of an asset. If an asset has been destroyed, so in this case, it is a capital receipt. Revenue receipt is a day-to-day operation. So you receive revenue receipt for the day-to-day operations. Okay, so the correct answer is capital receipt. Question number 9. The process of posting in accounting can be best described as. the process of posting. Posting is basically posting the letters in the Dropbox, or posting suitable person to a suitable job, or entering the ledger in the information contained in the ledger, or posting elements in the balance sheet. So there are many things that you can put up there. In terms of posting, in terms of accountancy, how do we define it? So the point is that after preparing the journal, then we'll move towards ledger. Then we move towards the trial balance. After trial balance, we have the P&L, or trading and P&L, and then we have the balance sheet. This is not posting. So the correct answer is not this, and this is very technical. This is very simple terms, so these will not be included as well. In this case, the point is that whenever you prepare the journal, then you post those elements in the ledger. So after the ledger, if the ledger is compiled, all the ledgers are compiled together, it goes towards the trial balance. Trial balance is basically the list of everything which is basically opened as an account in the journal, and then you prepare the P&L and the balance sheet. So if you're going correct, the balance sheet will match, or otherwise, if there's any trouble in terms of preparation of the balance sheet, it is not posting. Only the ledger posting is there. Whatever you have seen in your journal in terms of the transaction, it is taken into the ledger. So that's the point here. So the right answer is C. The last question for the day is that arrangements of the balance sheet is in a logical manner, either on the basis of the liquidity or the permanence, is known as dressing balance sheet, marshalling balance sheet, formatting balance sheet, or the markup balance sheet. When we talk about this area, okay, what happens is that every organization has to record their assets and liabilities on some basis, right? So it can either start like on the basis of liquidity, or on the basis of the permanence. In terms of liquidity, it means whatever is used for a very short period will be shown first and will be given a priority in the format. While in terms of permanence, whatever we have for a longer period will be shown first. For example, plant and machinery to be shown first is a part of permanence. While when we show the area of the assets first, as the current assets, maybe the debtors or the cash which is shown first, that is a part of liquidity. In accountancy, what happens is that we have a specific way of showing the books of accounts, be it the balance sheet there. In terms of the balance sheet, they say that no, we want things as per their life. If it is short term first, then it is as per liquidity. If it is long term first, then it is the permanence. So is it the dressing balance sheet, marshalling, formatting, or markup? The makeup balance sheet. When we talk about this area, the correct answer is marshalling of assets and liabilities. The marshalling balance sheet in terms of accountancy can also be called as marshalling of assets and liabilities. In the balance sheet, we show both assets as well as liabilities. So you can look forward to this area to be covered as the concept where we talk about the accountancy in terms of presentation of the balance sheet. So in terms of the companies, you will find that they follow the permanence method, and rest, it depends upon the sole proprietorships or the partnerships. They want to look forward to the area of liquidity first or the other. Okay, so now what I can do is let me show you a little detail regarding what we are dealing with in terms of JAIIB and CAIIB and what are we bringing up for everyone. So let's move on towards that area. But before we move forward to showing you the website, there's one more important thing, that is that India's biggest government exam book fair is on and it is ending soon. So go ahead, look out for this particular offer. At this point of time, it is available on the website. So this is basically where you can get the books from our portal or the website or the app, whatever suits you. So you can look forward to these things for all. This is there in all Adda books. There is a flat 22% off, and use the code Y538 in order to avail your discount. It is ending soon, so don't let this good offer go, and check out our website or the app. Okay, so let me show you how to look forward to our app as well. So whenever you would like to, or the portal, so you can look forward to the JAIIB and CAIIB classes. And Okay, so what you can do is if you have opened it on your phone and you haven't downloaded the app yet, you should definitely go ahead and download the app for further anything that is coming up, all the latest the all the latest details of the examination offers and everything there is visible for you guys. So you can look forward to this area of India's this is the website. As soon as you go onto the website, you can open up the area of all courses and you can look forward to the JAIIB guide. And this is where you will find all the details. This is for the JAIIB November, December 2022 English batch that I was talking about. And these are the courses that are available. First is the combined course of PPB, AFB and LRB. So you can look forward to this course. All you need to do is, okay, all you need to do is you can go on to the course and you can review, you can read about the basic details, which is basically more than 140 hours. The test series is also there. You'll also get the ebooks for your studies, and at the same time, these are live classes. And in terms of these live classes, what do you get? In terms of live classes, in case you are not able to attend the class, you can have the recording of the same. You can review it time and again as per your requirement, and the study plans are also there, so you can look forward to it in order to find out when the class starts and how to look forward to it, right? So all you need to do is if you feel that you would like to purchase it, then just go on to the details there. This is the details of all the faculty that are teaching there. So all you need to do is click on the area of buy now and use the code Y538, and you just need to apply it here, and there you get the discount. And at this point of time, 77% discount is available. If you use the app, you again get another set of discount. So then you can continue and pursue towards the purchasing of the JAIIB entire target batch. And if you're looking forward to only AFB, that is also available there. So this is the AFB batch, which is for the November, December. And there are for more than 45 hours of online live classes. There are 20 test series and there are 21 test books as well. So all you need to do is that you can go on to the buy now and use the code Y538, and you just need to apply it. Right, so there you get a discount of again 77%. It can be 78% if you use the app, and then this is the price that you need to pay. So if you're looking forward to the JAIIB classes and you are basically working upon these things, then definitely this is the time where you can look forward to the live classes as well, since the batch has just started. So you haven't missed much, and at the same time, other batches also starting from 25th. So this is the time where you can start preparing in a proper way and go through the study plan as well. That helps you to know how we are going to cover up the area of this syllabus, and at the same time this will help you to maintain the consistency. When you have a proper time plan, you have a proper schedule going on, it helps you to study consistently, one of the basic keys towards the success. So let's meet in the next class, and the series is still going on, 10 questions every day for the JAIIB examination. So let's meet in the next class, guys. Thank you so much. And don't forget to look out for the